So we're looking here at the options chain on IONQ. IONQ is a very compelling quantum computing name. I like the name long term. And what I want to talk to you about is when you're pricing out a long term leaps trade. So looking at the leaps, we're going out to the January 2027, 615 days till expiration. But what I want to tell you is, sometimes I'm going to clear this real fast. Sometimes when you look at these positions, first thing you want to do is you look at the open interest. That kind of tells you the legitimacy of the market, how much action it's getting, the liquidity also. But then you look at the bid ask spread. So you can see the furthest out of the money, the 75s, bid is 655, ask is 805. That's pretty wide. So you're going to have some slippage in there. And sometimes it's hard to get filled, especially if there's not a lot of open interest. But what I also want to tell you about is, and those are expensive too. I mean, the stock's at 31, you're paying almost $7.50. Let's look at it. 730 is the mid price to buy these furthest out of the money call options that are, a little less than 2 years out. It's interesting. I don't love it though. What I love is having a multi-dimensional approach and having the ability to go long and short. So buying the 60 calls, which look, little tighter bid ask spread, about 70 cents differential, 905 bid, 975 ask, and then selling the 70s. The 70s have a wider spread. So now this is where I want to talk to you about doing this long vertical call spread a year and a half, 2 years out. You can see that it's a $10 wide spread. So the most you can make is $10 minus your debit. Your debit right now is 90 cents. That's the mid price. But look at this, 15 cent to 195. That's a very wide spread. So what you want to do is, I can't talk about this in 2 or 3. This is a 10-minute conversation. So, like the video, comment if you want to learn more, comment the word trade, and I can get you a lot more information. But I'm going to make a separate video behind this that talks more in detail about how you can price out an intricate spread like this one, how to disseminate the bid-ask slippage, and how to test the market so that you don't get taken advantage of. So make sure you like and subscribe, and I'll see you in part 2.